Welcome back. As we've noted, the S&P TSX Composite Index is up nearly 22% so far this year. However, it's not because of rallies in Canadian telco stocks. That sector is down significantly on the year. And our next guest, an expert analyst, does not recommend an overweight position in the sector. Let's speak with Jerome Dubreuil, research analyst for telecom and media at Desjardins. He joins us from Montreal. Jerome, thank you very much for joining us. I'm looking at my Bloomberg screen of the different subgroups on the S&P TSX Composite Index on what has been a very good year so far for the TSX. All of them are very meaningfully in positive territory, except the communication services group, which is down 17.5%. And you don't recommend an overweight rating. So there are numerous headwinds facing these stocks. Why don't we begin there?
Yeah, good morning, everyone. So thanks for having me. Yes, we are not yet recommending an overweight on the sector. You know, we're right during the Black Friday period right now, so we're kind of assessing what's going on with the promotional intensity of the industry right now. And yes, we're seeing a bit of a tick up in competitive intensity. It's relatively reasonable, we would call it so far. But still not enough for us to get excited on the space, especially as the regulatory environment doesn't seem to be improving at the moment.
Competitive intensity is the telco companies putting their services, their devices and plans on sale for Black Friday, correct?
That's it. Yeah, selling plans for much cheaper than they used to do in the past years, with the exception of last year.
And that would be a negative for the upcoming quarterly profit growth, correct?
Yes, in general, obviously selling services at a lower price will affect the profitability of those companies. And we think this has been driven by the arrival of Cogeco in the industry in the wake of the Rogers Shaw transaction. Really, the competitive landscape has changed a lot since the closing of this transaction.
Cogeco, of course, now owns the Freedom Mobile service, which is active as a fourth competitor in many parts of the country. What about immigration? We've heard for many years that immigration is a huge positive for these companies because almost every single adult immigrant into the country, every single adult newcomer, and many of their children get a cell phone as soon as they arrive here. And now, of course, the federal government dialing back several streams of immigration or population increases into Canada, most notably perhaps the student stream.
Yeah, you're absolutely right for mentioning it. In 2023, we had record immigration in Canada. So we had approximately 3.2% population growth during that year. And definitely, if we rely on what the federal government has been saying since the month of March, it really looks like there's an effort to curtail the immigration in the coming years. And basically, as you're saying, we think immigration has been a source of important new subscriber loading since several years. And seeing a slowing down of immigration will definitely have an impact on the net additions that these companies are able to report. We're already starting to see it. But next year, 2025, should be seeing an accelerated improvement. Now, the only caveat I want to bring here is that curtailing immigration, you know, we're kind of still struggling with the fact that will it be easier said than done? You know, it's not clear to us that the federal government will be able to meet its targets. But definitely, we're certain that we're not going to be seeing the same level of growth in the sector that we had been seeing in 2023 going forward.
Okay, you've got buy ratings, I understand, on Rogers, Telus, and Cogeco. All three, I know Rogers and Telus are down significantly so far this year. I'm just going to check on Cogeco. But why do you have buy ratings on these three stocks?
Yeah, so our picking order right now starts with Telus. We didn't think we would have said that not so long ago, but it looks like a bit of a cleaner story now that Rogers has announced a complex infrastructure deal, and that BCE is venturing into the U.S. And so we think the organic growth of Telus going forward and their level of leverage will be easier to bear and will be more attractive for investors in 2025. Now, Cogeco are a bit of a tougher situation on the cable side. However, that's the longest runway of growth in wireless that we're seeing in Canada, because we think the market share that they have on wireless is still very low versus where it could be. On Rogers, a bit of a more complex situation, as I said, with the infrastructure deal, but still a relatively cheap stock that eventually the leverage could help return value to shareholders.
BCE, you mentioned it in passing. We get a lot of questions from viewers on that stock. It's been crushed. The market has not welcomed its foray into the United States. Let's finish with your views on BCE and that U.S. transaction. And we'll remind viewers that BCE is the parent of this television channel through its Bell Media division. What do you think on BCE?
Yeah, so BCE on the longer term, they still have quite a bit of exposure to the landline service, and obviously we don't know anyone that's bullish on that service. So the company is struggling to find new sources of growth, and that has led them to venture into the U.S. market. However, this market, we think, will be more competitive than it seems at first glance. There's new technology competing with the traditional wireline providers, such as fixed wireless, for example. It will not be an easy feat to compete against those type of players. So we think this acquisition has put a bit of more risk in the story, has changed the deleveraging plans that we were waiting for and hoping for BCE. So a bit more risk, and it's difficult to ask for investors to wait for several years before we can kind of see some free cash flow benefits. So probably more of a wait and see situation for BCE for next year. Okay,
we've only got about 30 seconds left. We want to ask you about Cogeco, which actually has performed very well this year compared to the others. It's up about 13%. It got a big boost in July. Can you give us very briefly your thoughts on Cogeco?
Of course. So the market really liked the fact that there could be some potential catalysts coming for this company, and that includes potential asset pruning in the U.S. and also the sale of their spectrum ownership that they have. We're still a hold on the name, mainly because of the difficult competitive U.S. situation we were talking about with BCE. That affects approximately half of Cogeco's business, and that will hurt the growth prospects that they will have in the future.